What is going on, family? Happy hump day to you. A lot going on. Market's picking steam back up. I told you this is going to happen. It's already picking up. It's not even waiting until after Labor Day. After Labor Day, for sure, the market will be on fire, but just you wait. All right, today, question of the day. Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Going to do this a little bit different way. Going to pose the question of the day every day. I'm getting so many questions on YouTube. People are sending me emails. Tremendous. I love it. Send me emails. Send me questions. Try to stump me. Let me know what you want to know, and I'll make videos about it. So, and this is one that kind of comes in different ways, and I've just been getting barraged by this a lot lately. I think a lot of younger investors are trying to figure out, hey, what's the best way to save/invest for retirement? Well, I've got this down for you. And let me tell you something. This is really a lot easier than most people teach. Okay. You can cloud this message a lot of different ways. You can complicate this message a lot of different ways. I'm not going to do that today. I'm going to share with you the two simple things you have to do. Really one thing you have to do. The other thing you should do if you can. And these are the only two things you need to do. Okay. Let's make this really simple. First and foremost, and I've got some resources I'm going to share with you here today as well, and then we're going to do the time of the update too, so don't worry, we'll get to everything. First of all, you have to own a home. You have to buy a home. You have to own a home because look at this. All right, let's get to the goods. I got some cool stuff for you today. People have been loving the graphs and stuff we've been doing, so I'm going to keep doing that. All right, we're going to get to that calculator in a second. Here you go. I had the data. I wasn't quite sure how to make it into a graph. Excel really helped me out. So this is a graph. Rental rates in San Diego. I'm going to look pretty much the same as anywhere else in the country. This is only through the end of 2020. So we don't even have data for 2021. They've continued to go much, much higher. But what you can see is over time, rents go higher. So when you buy a home, what you're doing is you're fixing in your payment. You're hedging your payment, your housing payment. Not only are you hedging your housing payment, saying, okay, it's going to be here. It's not going to go up every month or every year like rent does, but it's going to be this fixed amount. But also, after that period of time, after that 30-year mortgage is up, it drops to zero. Or you have to pay your taxes and insurance, but the mortgage payment itself drops to nothing. So it's this hedge that works as a hedge for 30 years and then becomes a freedom point. So we taught when you've paid off your home, your primary home, you are what we call it the freedom point. You now have a lot of options of what you want to do with your life. So the faster you can get to that point, the better, of course. This is the reason why we encourage people who are younger, buy a home, don't sell it, buy it, keep it, figure out how to keep it. Because you get that paid off home and man, your options change. So number one, most important thing to do is to buy real estate. Oh, I have another graph for you. This one will be linked as well in the YouTube. All of this stuff is made for YouTube, team. Even though we're live on Facebook right now, you can say hi, you can ask questions here. That's great. I can pull it up on the screen. All that's great. We're making these videos for YouTube. The links will be on YouTube. All right. This graph, this is from the St. Louis Fed. Okay. And this breaks down the median home price or the sales price for homes that were sold in the United States going back to 1963, which, by the way, if you go all the way back to the first piece of data, $17,800 was the average price. $17,800 in 1963. This data is only going through the end of 2020 as well, where it has this number up to $374,900. So this is modern day. You could take this graph back all the way to 1700s if you wanted to. People are paying $1 for 100 acres of land or whatever. Real estate goes up. So not only are you hedging your housing cost by fixing in your payment by owning a home and giving yourself that freedom point one day, but this asset is also appreciating based on the most fundamental macroeconomics principles imaginable. There's only so much real estate. There's an ever-growing population. The demand will increase while the supply cannot keep up with it. And we're seeing that right now. The trend that's happening right now is just an exacerbated version of what's been happening since the beginning of time with real estate. So if you want to, I'm kind of in the way here. Hold on. Let me see if I can get myself out of the way. I want you to be able to see this whole graph. Sorry. It's hard because I get in the way sometimes. Here, there we go. There's the graph. These shaded areas, by the way, are the recession periods. And that's what's so interesting to look at, because you see a lot of these recession periods, you do see a small decline in real estate values, but you see what happens afterwards is they immediately go higher. So those recessions, when you see heavy hits to real estate, that is when, it's a buying opportunity. So some of you may remember this. It was before everyone hated Trump, but in like 2010, he said, if you can buy a house, buy one. If you can buy two, buy two. We repeated that clip on our radio show over and over and over. And, it was such a good call. What's up, Rachel? See, you can just say hi. I'll say what's up. James, my man, who lives in a house for 30 years. Do you have a stat? I'm thinking 10 to 20%. Well, it's a good question. It is a good question. And you know what? He's right. James has a good question. Who lives in their house for 30 years anymore? That's the problem. So what I'm trying to teach here is the principles of how to do this the right way. People will buy and sell lots of houses usually in their lifetime. But if you look back to who really did it right, look at our parents, grandparents. They bought a house. They stayed in the same house for 30, 40, 50 years, 60 years. That worked out very, very well for them. So yeah, you can take advantage of the fact that real estate is going to go up, over time, and you can, get in and out of it and pay some fees and be okay with that. But the reality is, buy a home or two or three. Our retirement strategy has multiple homes involved in multiple locations because we want to be mobile. We want to move around. We want to go to different places. And so we're trying to own multiple homes free and clear when we retire. And so it just depends on what you want to do. But that's why a strategy is so important, James. Thank you for asking that question. You want to have a real estate strategy so you can end up owning a home free and clear, and you don't just continue to spend equity into new properties while paying a bunch of transaction fees. So very, very good question. All right, what's the second thing we need to do? Okay, we need to own a home. Derrick, we get it. We get it. You beat us up over this on a regular basis. What's the other thing to do? Two things. Buy a home. Second thing, max out your 401k. That's it. Do those two things, and you will do everything you need in order to retire comfortably. Those two things are all you need to do. Some people might say, but wait a minute, maxing out the 401k, that's like $20,000 a year to save pre-tax. What if I only make $35,000 a year? There's no way I can do that. Okay. When I say max out your 401k, what I mean is put as much money into it as you possibly can, especially if your employer is matching up to a certain percentage. Make sure you invest as much to get the maximum match from your employer, whatever that is. If the employer says we'll match up to 4%, then make sure you put at least your 4% in, so you get their 4%. Now you're getting 8%. Make sure you do that. Max out your 401k means put as much into it as you can. And the way that you do this is a simple thing to do with your 401k is to organize it. This has been done now. You can do it online very, very easily. And I'll talk about if you're self-employed in just a second. So for everyone who's W-2, you have an employer, you have a 401k plan, you go ahead and you maximize your 401k, whatever you can put into it. If you can max it out completely, you will be golden. If all you can put is $5,000 a year or $3,000 a year, you put in as much as you can, all right? And you set it up to automatically rebalance. So choose, 4 different funds within your plan. Do like a small cap growth, a mid cap growth, a large cap blend or growth or whatever. Just, pick the different mutual funds that are diversified, and then get a bond ETF or mutual fund as well. And then just set it to automatically rebalance. So when one goes up, the others may go down or may stay the same, it'll automatically rebalance and sell those off. It'll sell the winners and buy the losers. And it usually will do that on a monthly or quarterly basis, which is perfect. It's completely hands off. All you have to do is just do it. Just set it up. It'll come out of your check. You don't have to try to manage anything. It's all automatic. This is the thing to do. So buy your home, maximize your 401k, whatever that means for you. And that's it. And everything else that you want to invest in or play around with, you want to buy an investment property, you want to buy some cryptocurrency, do you want to make an investment in something else, try to invest in a business or something, everything else you can play with. You can take some chances. You can do some things. If you do those two things, you're going to be okay. And if you have to choose between the two, owning a home is much more important because you cannot live in your 401k. That's why it's number one. You have to buy a home first. Buy your primary residence. Then you can invest money into your 401k. You can be very diversified there, be very broad. Even if you're paying some extra fees because you're in a 401k or whatever to the management company, okay, it's fine, because the hands-off nature of the 401k is going to pay for itself for you. You're going to get so much more value out of your investment because it's hands-off and it's automatic. because if you have the ability to touch it, you'll mess it up. Same with me. I do the same thing. I max out my 401k and been doing it for a long time. It's a very good thing to do. Now, what if you're self-employed? Hey, Derrick, I'm self-employed. I don't have a 401k. Oh, let me tell you something. So if you are self-employed, you can set up solo 401k. You can set up these profit sharing KIOs. There's a whole bunch of things that you can set up that are the exact same thing. Even if you're the only employee of your company, just go to your broker dealer, your Fidelity, Charles Schwab, whatever. Tell them you're self-employed. You want to set up your own retirement plan. They'll set it up for you in no time, and you can get the exact same benefits, pre-tax investment money. We call that tax-deferred investment money that you can put in, create your own account. So you don't have to be an employee in order to do this. And you can do the exact same things. If you're paying yourself, like you're an S Corp, you're paying yourself, you can have it all swiped from your paycheck, so you don't have to look at it. Or you can set it up to do an annual deposit, which is what I did when I was self-employed for a long time. However you want. But you don't have to miss out on it just because you're self-employed. Okay? So buy a home, maximize your 401k, and play. You feel free to play with everything else. You want to buy some stocks, you want to trade some futures, whatever. Okay. But those two things you need to do. If you do those things, you'll be okay. And the sooner in life you can do it, the better. All right. Let's see here. What's up? James has questions. Everyone I know well has moved and kept the house they left every time. Yeah. A lot of people are doing that. A lot of people are not selling the home. They're keeping it and buying the next one and building real estate portfolios. I love that. If you can do it and you can afford that and it's part of your game plan, then it's terrific. Other unique strategies, I use index universal life policies for tax-free retirement. This is after you go up to your 401k employer match. Yeah. No, that's also there. Like I said, there's cool stuff out there. There's a lot of, complicated investment strategies and ideas for, different types of insurance, whether it's universal life, whole life, etc. There's a whole bunch of things that you could do. But if you just do these two things and we keep it simple, then you'll be in great shape. So just know that it's not as hard as some people may make it seem. Great stuff. Thank you, James, for your input. We are live, so feel free to say hi, say what's up. All right, we're going to take a look at a couple things here, make sure I'm not in the way. So market's pretty flat today. I noticed that CNBC was reporting that there's some hedge funds with short positions in a kind of a big way. And that makes sense to me. I mean, it feels like we've been at a top here for stocks for a while, but the market continues to go higher, and every time it gets hit a little bit, it bounces right back up. The stock market, very, very resilient here. What's going to come out of this Jackson Hole meeting, though, I think could be explosive to the downside. So if someone has a big short position now, just know that's probably what they're betting on. Remember the story oil was telling us? When oil got hit, and I was like, hey, we need to pay attention to this story. What is going on here? Oil got into the low 60s, back up to the high 60s. And it's the story today. Oil rises on U.S. fuel demand, extends rally. Yeah, oil coming back up. I told you it was a good time to buy. I wouldn't tell you that if I wasn't sure. Okay. I do think oil continues to go higher. We just have such pent-up demand in so many different places, while gold still under 1,800. Oh, man, what a painful thing it must be to own gold. Seriously, it just doesn't go anywhere. It doesn't go down much, but it's just flat. It's like corn. It's crazy. Speaking of something that does go places, cryptocurrency, Ethereum still over 3,200. Bitcoin almost 49,000, the high 40s area here, trying to break through 50. If Bitcoin breaks through 50, I think it's going to skyrocket straight to 60. So similarly how it did when it broke 40 and kind of went straight to 50, I think you're going to see that happen again. It's going to level up. A lot of things coming into what's happening there. Let's take a look at mortgage rates. I'm not going to dive into crypto too much today. The purpose of today's video is really just to help answer the big question about what you should do to save for retirement. Not a great day today, team. We lost 19 basis points. Barry hit it on the head again with the lock alert yesterday. I was unable to make a video yesterday, but bottom line is we broke through an important, moving average here at the 50-day, and we immediately retreated straight to the support level here. We did hold that support level today, which is very, 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 very important. I really hope that we can still at least bounce up this direction, because remember, we want to see higher bond prices. That means lower rates. I think there's a little bit of anticipation here for what's going to come out of Jackson Hole. I believe that's what this was sort of a precursor for, hey, it's going to be bad. And so a lot seems to be baked into the market. If you look at the difference between where we were prior to the taper talk really heating up and where it ended up, that's a pretty big move. And where we are now is right here. So we really have that entire thing still sort of priced into the market. I believe that is what the market was anticipating, some potentially bad news. So if we get good news, I mean, we could ratchet higher from here. If we get bad news, I don't think there's a ton of downside here, but we'll just have to kind of wait and see what comes out of this meeting and how intense the dialogue is from the Fed, how much they talk about tapering and how quickly it's going to happen, as that could definitely affect the stock market. But as I said, the stock market's somewhat fragile here, not really moving a lot, mostly sideways. When it dips down, it comes back, but kind of staying right at that Dow 35,000 range. S&P has been the 44 to 4,500 range, and the NASDAQ has made 14 to 15,000 its home. So we've kind of gotten to a certain point where the market is it has an identity, and I think that identity could be challenged potentially by what the Fed says here. So we'll see what happens. I think we're going to get information today, but for sure by tomorrow we'll have more information on this. So we'll stay very, very much up to date on that, and I'll keep you posted what we find out. Let's see. Cool. Yeah, so that was it for today. Just wanted to give you that. I'm going to put this retirement calculator. This is really cool. You can just put like, okay, here's my annual income. Let's say I make 60,000. Here's how old I am. How's all the retire. You can put life expectancy in there if you want to, just so it knows where to end the graph. 85 if you're a guy, 87 if you're a girl. And then current savings. So you has a starting point. If you want to put something in there, you could also make that 0. You say, hey, I don't have anything right now. And it'll start the graph at 0. And then you could say, okay, how much money do you want to make per year after you retire? So that is also something that can get calculated. You say, well, you know what? I'm going to be living in an area where I have a paid off house. I'm not going to need a whole lot of money. Maybe I only need 50,000 in retirement. And for these percentage returns, just put 3%. I know you'll probably get more than that, but just put 3. Put 3 because that's conservative and it will make sense for sure. And whatever you're looking at there, will tell you. Now, what this does is you put this in and it tells you how much you need to save per year. And so the whole point of that is so you know what to target. Like, okay, well, it's $12,303 per year. I need to save $1,000 a month. So I need to go in and figure out of my 401k, how much do I make? Can I put that much in? And then if you're getting a match from your employer, you can sort of factor that into the equation as well. So that's what this calculator is for. I'm going to put that link in there as well today. So check that out. And of course, as always, should you have questions or need help with a mortgage, buy, refi, give me a call, text, shoot me an email. Happy to help. Help us figure out the question of the day for tomorrow. Send me an email or make a comment on YouTube, and we'll see if we can get you on here. All right, guys, have a great day. I'll see you soon.